While economists worry about growth in China and that unrest in Hong Kong, a new survey out today shows steady economic growth here in the U.S. But even though we are heading in the right direction, one member of the Federal Reserve is urging caution about raising benchmark interest rates too soon. Steve Leisman has the story.
Charlie Evans, the Chicago Fed president and one of the more dovish members of the central bank, saying today that he's ready to be patient before raising interest rates. Evans is even willing to go later than the current market consensus of mid-2015 to make sure the economy is on firm footing. His reasons? The Fed doesn't want to reverse course if the economy turns down again, and because of economic weakness overseas. In fact, Evans, who is a voter next year, fairly bristles when asked why the Fed still has a zero interest rate policy now.
Sometimes I just think you have to be kidding me on this, right? Look at Europe. Look at the situation that they're facing. They're facing disinflationary risk. It's very low. They put the monetary union together, and they're not able to hit their target. They're way below there. They're worried about the entire integration of that community. Look at Japan. They've had low interest rates and a bad economy, disinflation for 20 years. China's having its difficulties in terms of overheating and how they're going to generate growth without also bubbles appearing in the housing market.
Evans acknowledged the U.S. economy has improved. And a new survey from the National Association for Business Economics sees the improvement continuing through 2015, with the economy breaking out of the lackluster 2% growth pattern that's prevailed since the recovery began.
It looks like it's a return to more like 3% growth for the year ahead, and it's broad-based. You're talking about residential investment, the consumer and business investment. So it looks good, and government finally turns the corner away from negative to positive.
That optimism got a boost with new income and spending numbers for August. A surge in auto sales boosted spending, but there were also gains in services. Americans spent more because they had more money in their pockets. Wage and salary gains, a critical missing link in this recovery, were the best since March.
All of today's data and commentary will be cast aside this Friday when we get the September jobs report. The pace of job growth and the level of the unemployment rate will provide the best clues for the pace of economic growth and just when the Federal Reserve will hike interest rates. For Nightly Business Report, I'm Steve Leisman.